Hello everyone, how are you my friends? Good to be connected. We are about to get started with the session in 40 plus seconds. This is the time that we normally use for a quick sound check. A quick sound check would be done by typing a quick hello on the chat box. That tells me that you hear me, and it's a nice way to get started. So please do that, and we start in 30 seconds. Thank you so much, everybody. Thank you, Mark. How are you, my friend? Good to see you. Joe, good to see you as well. 10 more seconds, and we're going to be on the way. Okay, 3, 2, 1. That's it. Top of the hour. Time to get started. Welcome everybody to the session. Hello, everyone. If you're live, super hello. If you're watching this recorded, also super hello to you, even though it's delayed. Today is September 8, 2022. My name is Jose Blasco, and we are getting together to do some options trading. This is our options trading live session, isn't it? Before we get started, we are going to be looking at the upper left side of the screen, where I am about to highlight our financial disclaimer. So please read it carefully. This is important information. It is fairly short, and therefore I am counting on you all to read it completely. It's important. Thank you so much. How are you, Jeff? This is good to see you as well, everybody. Very nice. And again, for the ones of you that are new to the sessions, the agenda normally takes place in this manner, which we look at the market first, we understand what's happening overall. From there, we move into reviewing trades that we may have running, which we do trade management, which we need to do today, and from there we move into looking for new market opportunities. Okay, and the process is always looking for creating or helping you to create your own processes, your own trading plans. So whatever is it that I do not only helps you from a learning experience, but most importantly helps you to create routines, rules, trading plans, processes, so you can trade independently any other day of the week, because we don't meet every day, isn't it? So the idea is that you become as independent as possible, and we are here to support you. But the idea is that you guide your own trading accounts with your own trade ideas, trade executions, and so on. So ask questions. We are here to help, and certainly happy to listen and happy to answer. Okay. By the way, I'm counting on you to do the same. If I ask you questions, I'm counting on you to give me answers, okay? So that way we have a little bit of a teamwork going on and interaction. I'm going to turn off the ticker that we have in the bottom part of the screen to just make a bit more space, but super proud of that ticker running, where we've got the designation of number one new release in 3 different categories, both paperback and ebook on Amazon. So we are super excited, super happy, and hopefully you guys, if you are reading the book, you are enjoying it. And if you are, it'd be nice that you give us some review on Amazon so other people know how great the book is, or how much you have enjoyed it. Or if you haven't, just give us also a review so we can think about it for the next edition of the book. Anyway, let's begin with our market analysis. Okay, so I'm going to start looking at the VIX. Okay, so I'll look at the VIX first. EIX. Here's the VIX. The VIX is going down today by just a little bit, 1%, something like that. So the VIX is currently trading at 24. Notice that earlier in the week, we reached levels of 27 something, just give a nice little kiss there to the red UFO, and then from there the VIX started going down to the current value of today, which is 24. Again, if I squeeze the chart a bit more, I guess you'll be with me if I say that 24 is not that high, 24 is also not that low. So we are trading in what I've called in prior sessions in the middle of nowhere, right? So it's not too high, it's not too low. So today really I would not mind to look into building credit trades or look into building debit trades. Both cases would make sense to me, given where the VIX is at. Obviously, we also need to look at what's the implied volatility condition of the specific markets that we trade. And if, let's say, you are trading, I know, I'm just going to make this up. Let's say you want to trade options on McDonald's, and the implied volatility on McDonald's is low. So, of course, you want to be a buyer of options. You want to be a debit trader. And vice versa if the options were expensive, right? But the fact that the VIX is where it is gives us a little bit of an extra clue on what may happen to options overall. And when the VIX is low, certainly it's more intelligent to prepare on trading debit strategies. When the VIX is high, it's more intelligent to prepare on trading credit strategies. Right now, it's kind of like in the middle. So then anything works, okay? Depending on the specific underlying asset implied volatility condition that would set, our decision on what to do. Trying to be as smart and intelligent and efficient as possible in the marketplace. So what do we do when volatility is in the middle? Again, I can go the route of credit or debit opportunities. I do not mind. Typically, what you would do is look at your portfolio, and let's say on your portfolio, so what do we have? Let me bring the platform here. One sec, here we go. So you would look at this, and what is it that we got? So we got 14 delta, so we are slightly positive delta, slightly bullish. We got 29 vega, so we got plenty of positive vega. So the idea would be to try to neutralize that a little bit, and therefore, if that was my portfolio, and today I look at the VIX being in the middle of nowhere, and therefore credit or debit works, well, I would rather do credit strategies to bring some negative vega and bring that 29 value to go down as close to zero as possible. That would be great. Again, for educational purposes, I may go the other route because it may be more interesting to execute double calendars, for example. So again, we'll talk about this in a moment. But again, if the VIX is in the middle of nowhere, really your portfolio components will dictate what is best for you to do, focusing on credits or debits, because the VIX does not give you any particular advantage by being either a buyer or a seller of options. Please let me know in the chat box if that made sense. Hopefully it does. If it doesn't, it's very important, so I would like to re-explain it so everybody understands. Okay, so let me know if that made sense, and if so, I'll just keep going. While you guys respond, I want to look at the S&P. Okay, and what do we have with the S&P? Well, believe it or not, we are still in a down climate. Okay, thick and red down climate. Okay, now notice what's happening as we speak. We are crossing above the EMA, which we almost did a few days ago, but we didn't. So what does that mean? Well, so far nothing. We need to wait until the day concludes and price closes. But if that is going to be the case and the market closes like that, so we're going to get to see a blue dot on the next trading day. So we are about to see a climate change. It looks like that. We don't know for sure until tomorrow, but it looks like we're going to have a climate change. And if we have a climate change, so in one hand, we are up for a move to the upside. Statistically speaking, that move would take 5 days. So you would expect, 5 candles on the way up. So that is likely going to happen. But, and I'm sure you guys are looking at the bottom part of the screen, isn't it? We can see how we got the gray line above the blue line. Look, last week when we met, that was not the case. Okay, last week when we met, that was not the case. And we had the blue line above the gray, where today the gray is above the blue. So in other words, we have sellers in the marketplace. We may be facing a change of climate, and a climate that starts going higher, and therefore for short-term opportunities, being bullish makes sense, but certainly it would be a very aggressive type of approach to trading, given the fact that we know, thanks to looking at the derivative markets, looking at the options implied volatility of puts and calls separately, blue and gray, we know sellers are in the marketplace. Now, we don't know where they are. I mean, you could know thanks to the UFOs, of course. Okay, so this is the places where the sellers are. But the sellers that are the reason for that gray line to be above the blue, we don't know where they are. Okay, so it may take the market to rally to, I don't know, 410, 415, 420 before it crashes. But so far, the expectation will be that, given the fact that we have sellers in the marketplace, being bullish would only make sense if we were to execute trades in a pretty short-term basis, because having sellers in the marketplace, there is danger for the markets to collapse quickly, and we may not even reach the normal duration of a climate, which is 5, because sellers kick in, and then the climate goes back to all red. Like it happened on that particular day, for example. We only had one blue, and then it went back down, okay? So this could be the case, okay? Now, last week, when we were talking about this, to be honest, I don't remember if it was last week or the week before. I'm confused now. I'm sorry about that. But I remember there was one day I was very bullish with my comments, and I was saying, look, if we have a change of climate, and the blue line is above the gray line. So let's get ready for bullish trades and so on. Well, guess what? This never happened because we had a crossover and the gray line was above the blue. So this changes completely the interpretation of the climate in the market, where it could be blue, and that means a lot. But if we got sellers in the market that are identified in the options arena, we will not expect the S&P to rally too high for too long. So short-term trades would make sense, but nothing else. Okay. Now, in any case, this is in case tomorrow the climate changes to blue. What about today? What are we going to trade today? What's the market condition today? Well, the market condition today, it's red. So we are supposed to be sellers, and we got sellers in the marketplace. So you would say, okay, let's go a short. Okay. Well, wait a moment, because while we are sellers, right? So statistics suggested that this climate will last for 3 candles. Statistics suggested for this climate to extend maximum to 111. And the reality is that that climate extended close to 2. And that climate took 1, 2, 3, 4, 5, 6, 7, 8 candles. So that climate has been lasting for too long. 8 is more than double than 3. So it's over a 2 standard deviation duration for the duration of the climate. And it's over 1.11, which is, let's call it 2. So it's kind of like a 4 standard deviation for extension. So in other words, statistically speaking, it's not sustainable. We obviously have seen cases where there is plenty of fear in the marketplace and things like that, and the market just collapsed to levels, which is absolutely unbelievable. And statistics, we have never suggested that, right? But that's a rare case. If that was to happen all the time, then the statistics, okay, autoclimate would show that a normal thing to happen is not 3, a normal thing to happen is 10 or whatever. So we got to be respectful of those values, no matter interpretations that we may have when we read the news, when we look at whatever. The fact is that we are now in a climate that has been running for 8 candles, where statistics suggest 3 is normal. So while we have sellers in the marketplace, positioning ourselves to be short aggressively, it's what we call hopeful, and even more specifically, it's what we call late. Okay, so we are late. You know, if you recall, like if I go to the matrix and look at our auto climate tab, and you look at the various conditions available, we got early, sensible, hopeful, and late. Well, the S&P is late down in this particular case. So obviously, going short doesn't make sense, and going long, we could get aggressive and start getting long. Okay, it's not really my preferred style, but we could. We have done cases of that in the past, but I would not want to do that given the fact that we got sellers in the market. Why would you want to aggressively go long in a climate that, yes, it may turn to blue, but then it's going to be a short duration going up? So what to do in a case like today? Well, you're guessing it, isn't it? What about you tell me on the chat box? What would you do when the implied volatility is more or less in the middle of nowhere, and when going short is late and going long, it's low probability because the gray line is above the blue line and the climate has not even changed yet? What would you do? What option strategy would you employ to be statistically in a safe position, ready to position yourself in a way to make a profit from the market without exposing you to the market slapping you on the face because the market direction is totally against you? What would you do? I'm going to go back to the chat box to check your prior answers and waiting for this answer as well. Mark, thank you so much for that. Makes sense. Joe, why don't we look at OVM for more hints about where price will go? You could, Joe. There are many, how do I put this? There are many options books out there that talk about this phenomenon of analysis by paralysis. So in my trading style, precisely because I am a perfectionist, okay, and I believe you are too, Joe, isn't it? Which is good. It has benefits, okay? It's not that. I'm not saying that's bad. But because I am a perfectionist, I remember in my early stages, I was looking at so many things before taking a trade. And the outcome of looking at too many things was, number one, that I would have very few trades validated. And then if I was to take a validated trade and it would turn against me, the sense of frustration and drop on the confidence of my trading actions was too intense. Why? Because I looked at too many things, creating the false impression that the trade was a sure thing, right? Throughout the years, I decided to become much more pragmatic and simplistic at my market analysis. And while we are still looking at plenty of tools on the screen, I will not add more. Why? Because in the end, if you add on volume, analysis, you will conclude something very similar to what the auto climate is already saying. And on top of that, the volume you analyze is really the volume of the instrument itself, which the instrument is being traded by small account holders combined with big account holders, where when we look at the options, and that's the implied volatility, the blue and the gray line, you are looking at trades that in most cases that are coming from people with larger accounts. And therefore, that information is supposed to be more relevant. So I would say the information we got on the screen is sufficient, but for sure, if you wanted to add that to your analysis, that would make sense too. Now, the options volume map, which is your point, because I was talking about on volume balance, the options volume map, which is your question, certainly we can go ahead and take a look at that. Okay, and it's certainly an interesting observation. But while I use it in many sessions in the past, so I illustrate the use of the tool in market analysis for a market such as the S&P. And this may sound counterintuitive, but you will see it will make sense. I feel, and therefore I don't use it as much for market analysis because I feel it's much less relevant compared to when you apply it to individual securities. The reason why is because the S&P market is so heavily traded. There are so many contracts and so many expiration dates, and also with options trading, you can have buy orders and sell orders of options, which selling a call, for example, selling a put, for example, while it's selling is a bullish thing to do, isn't it? So a lot of the things that we see on the option volume map apply to a market such as the S&P, which is so heavily traded for so many reasons. Some people may trade the S&P, and it's because they're hedging a portfolio. It's not because they're trading the S&P. So, for example, here you see that you got more calls traded than puts on this expiration date, but you got equal on the next expiration date. So again, how you do really interpret this information in a way that is more useful. So again, in the case of the S&P, basically almost every time you end up confirming what we've seen on the left. Where I feel that this provides a greater insight, it's more when it comes to looking at individual securities, and especially not from assessing the market condition today, but from assessing what we think the market condition will be into the next trading day as a continuation. So let me pause and rewind because I'm adding a lot of information here. So for example, again, for the S&P, it's certainly relevant, but again, instead of the S&P, let's say you're trading McDonald's. Okay? And let me load the whole thing. Okay? And you see that very great example. Actually, I didn't know that was set out like that, but perfect. What do I have with McDonald's? I have the climate already changed. What do I have? The blue is above the gray. All of this is giving you permission to go long, right? So what would I do now is I would look at the prior day, which is when the climate changed. Okay, let the whole volume map to load, and now I will look at these values, right, and see if those values are great. And 1.6, 1.8 is certainly more than 1.5, which is the minimum. But to stack morals in your favor, I would like to see that even greater. And if the prior day you see very, very powerful values there, the probability of a continuation of the move is very good. And in other words, that means that you are giving your climate a greater chance to reach 6 instead of, so the day the climate started, right? So that's the day when I'm looking at the volume map. That's really, I would say, a much more interesting application of the volume map. And that's why I was not looking at it as I was looking at the S&P. Okay, so hopefully this makes sense, gives you a little bit of an extra insight on things that could be done when understanding the market conditions. But again, with the volume map, I feel much more value when looking at individual securities, because when you look at the S&P, many different reasons for people to take the trades may be kind of like masked in the middle of so many thousands of trades, which some of them may be speculative, some of them may be hedging decisions. But when you look at individual securities, it's more like, okay, is it going up or down? Okay, it's a simplistic approach, and the volume out there, it's more of a tool that reveals something that you would not know otherwise. Okay, let me know, Joe, if that made sense to you. Jeff, double calendar, you got it right. Mark, short iron condor or double calendar. Yes, you're correct. That would be the approach for today's trading. and that's what we're going to do later after reviewing the trades. So we just completed our market analysis. We now know we're going to be focusing on double calendars or iron condors. And before we do that, I'm going to look at the positions. Thank you, Joe. Pleasure. Great questions as always, Joe. I really love it. I love these sessions, guys. We have very, very interesting conversations. We are pouring into the conversation all the time and efforts that you guys put in place by doing your own analysis, own research in the form of questions. And I just bring my 2 cents from my market experience as well, and we put it all together, and hopefully this adds plenty of value for you guys. So I'm enjoying it a lot. Thank you so much for that. So what do we have? First thing, we have a trade with Nucor. If we look at the risk graph, we look at the chart in a sec. This trade seems to be providing a profit as we speak. Yes, this trade is providing $122 of profit per contract as we speak. We are right in the middle of the green zone, so this is going well. And if it goes up, we're going to make more. If it goes down, we're going to make more. And of course, if volatility increases, we're going to make even more, which is the goal. We are looking for that increase of volatility as we are approaching earnings. Which we still have a while to go until October 21st, which is the latest expiration date. So where is Nucor? Okay, so Nucor is behaving very politely. Okay, it's doing what we wanted to do when we did this trade, and we entered on that particular day at this price. Okay, that was the day. So when we entered that day at that price, we scanned for Nucor utilizing the matrix built in top, and we were looking for trades where we got neutrality on the daily and the weekly time frame, and you can see that stock is behaving neutral. It went up, it went down, it went up. So it's behaving neutral. We love it. Thank you very much. So the beauty of going neutral is that it's giving us the opportunity to keep working on the calls that we have located around 150 and the puts that we have located around 125, and we keep rolling them every week. And it looks like we're going to do it again. Okay, so let me go ahead and look at the option chain for Nucor. Look at September 9 and 16, which are the next, the current and next expiration date. And we are looking at 125 and 150. Okay. And we are now asking ourselves the question, are the Greeks distorted? Okay, that's the question. Okay, so let's take a look, and we'll start with the put side. So the put side provides a premium between 21 cents and 1 cent. Okay, and theta is $30. So based on theta, you're gonna make $30 for 1 day and a half until Friday. That's $45, and the most you can make is actually 21. So the put Greeks are distorted, time to roll. And probably this is happening already since a year ago, or maybe a year and a half ago, and you guys already did. What about the call side? Well, the call side is not providing any bid. Okay, the most we can get is 8, and theta is 22, which obviously 22 times 1.5, it's way more than 8. So again, both the calls and the puts are distorted, and therefore we're gonna take the 150 call, buy it back at 8 and sell it at 50. And we're gonna take the 125 put, buy it back up to 21 and sell it again at 60 something. And this will create new premium coming in, lowering the cost of the trade. We just concluded both the calls and the puts are distorted. So it's time to roll. Now, talking about time to roll, you may also remember that I was not able to roll the 150 call last week. So I left an order, good till cancel, to sell that call at 15 cents, and I never got filled on the trade. And so far, even though the market went higher, it's trading at 4 cents. Why? Because again, the expiration date is tomorrow, so there is nothing left there. So again, I could have done this roll days ago and get much more than, like 60 cents or something like that. But anyway, that's today when we're meeting, so that's today when I'm looking at it, okay? So what am I gonna do here? Well, I'm just gonna replace that one. That's gonna be a very easy action. I'm gonna replace it. Instead of September 9, I'm gonna make it September 16. Okay, and I'm just gonna unlock this. It seems that we're gonna get around 51. So Let me cancel any rule we had. Save. And this should allow me now to confirm and send. Okay, so I'm going to sell the call, and let's see how much I get for the call. And in the meantime, that's it. So I got filled at 51 cents on the call side. Thank you very much. Actually, I got filled at 62 cents. Okay, much better. So I got 62 cents for the call side, but I need to do a little bit of math inside top. Take a look. So this is top. This is my position with Nucor. Let me bring the risk graphic again. I'm gonna compare spreads. I'm gonna copy primary. I'm gonna edit it. And now on the call side, instead of September 9, I just sold the September 16, right? And I got 62 cents, right? I got 62 cents for the 150 call that expires in September 16. Okay, got it. Okay, but in my simulation, let me bring a calculator. In my simulation, I had accounted for 15 cents last week. 15 cents I never got because I never got filled. So the reality is that my 62 cents I got today, okay, are 62 cents, but I never got the 15 cents last week. So really what I want to add to what I currently have is 47 cents. I don't want to add the full 62. That would be a little bit of doing the math in my favor, right? Which makes no sense. So, so 47 cents on top of 243, that brings up the total premium collected to be 2.9. Okay, great. And now on the put side, okay, so I'm going to move my 125 put to be September 16. Let's see how much I'm going to get. And the moment I know what I get, I'm going to rectify this value by adding the new premium collected. So that is going to be done by selecting the 125 put. And I'm going to create a rolling order with September 16. It seems that this will bring in 52 cents. Let's see if we get filled at that value. That's the midpoint. If I don't get filled, I will tweak it because I don't want to waste too much time. I want to get filled quickly. Remember, if you're watching this recorded and you're new, we never force trades, we never push trades, we never use market order with options, especially with spreads. That would be crazy. But I often do it in the sessions, so I get this field, so I get the value, so I can document it and move to the next trade, just because we have limited time together, okay? So please do not do that, okay? I'm just gonna try 50. Okay, see if I get it. Okay, 50, the mark is 52. So with a little bit of patience in a real account, we should be able to get it. But again, I'm just gonna push it. I'm gonna drop it to 45 to see if I get filled. Okay, I got filled at 48, as you can see. Okay, good. So that's it. I'm in. So I got 48 cents to do this roll, and therefore going back to top and getting my calculator back. So we got 48 cents to be added to my 258, which is the premium I got before, making this premium 3.06. Okay, so click OK. And when I click OK, so notice now my new risk graph, which is basically the same in orange color, but now the difference is that, as you can see, the most I can lose now is 569 instead of 664. Okay, so I lowered the risk of the trade. And again, same story. If volatility rises, here we go. Beautiful. We can make, $500, $700 of profit. So again, we are positioning ourselves as we are shaving the risk every week, and doing this better. You rolled yesterday, Mark, and you got 138. Very good. That's more than what I got today. So good job doing it yesterday. And a way to massage the trade. That's how we do it. So I'm just gonna right-click, copy the position to the clipboard. I'm just gonna bring it here and paste it inside our positions panel. and that way we will be able to again go back to this trade next week and continue the analysis, the massaging, and moving towards October 21st, which is when the earnings reports, this is the expiration date nearest to the earnings reports. Earnings reports are supposed to be on the 20th of October. By the way, this could change. Okay, this could change. So we are going to have to be careful there and watch this, because if that date changes, we may exit the trade immediately not to suffer too much pain on volatility drop. Okay. Good. So we have that. I'm going to close the risk graph. Any question about Nucor, let me know. We are now looking at Lennar Corporation, which is an iron condor. Okay. So Lennar Corporation is an iron condor, which I did not manage to tweak or roll or massage. First, because multiple actions were needed, as you recall from the last week, right? So we had multiple red lines, meaning all those red lines meant one action, right? And we only meet once a week, so I could not do it. And last week, when I tried to roll the 87.86, I did not get filled. I was not getting premium enough. Liquidity was not there. I never got filled, or I was going to get filled for so little that it was not worth it. So I just left it the way it was. So in my screen, nothing has changed. I still have only one Lennar Corporation. So far, it's showing a little bit of negative P&L, minus 12.5. So let me open this. I know that some of you already rolled this trade one or multiple times, so you should be in a better position than me. But anyway, that's where I am. So that's what I'm sharing, and we're going to assess, if you are where I am, what should you do, right? So again, this trade, my trade, again, yours is probably better. My trade could lose a maximum of $90, okay? And we are now assessing, should I roll or not, okay? Well, when looking at the chart, okay, we can see that today, okay, and this, again, this is not new from today. So if I look at, what was the date? It was the 1st, September 1st was last week when we met. So September 1st is right here. Yes. Okay, so right here, September 1st, we were crossing, okay, the statistics were suggesting that we were crossing the purple line. Therefore, it was time to roll, and that's why we were using that red line. Okay, on the next day, let me grab what I need to grab. Here we go. On the next day, that line was in the same place. On the next day, that line went a little lower. Okay, so that day, and a new analysis should have been performed where, sorry, I didn't click in the right place, where we will need to be looking at, potential new UFOs above this red line, okay? And by the way, I'm just gonna, not to repeat myself from last week. So if I look at it the day after, it went up. If I look at it today, it went up. So, again, that day was the day to do the roll, okay? That was the day, okay? So if I did the roll on that particular day, so let's take a look at the 55-minute time frame. So that particular day is that red line, and we had one red UFO, but no two. So still two UFOs would be still the purple line where we have it. What if I looked at the 34-minute time frame and the 21? So yes, in this case, I got 1, 2, and 3. So I could have moved the purple line come on, purple line, here we go, to this particular location by leaning against this UFO, because I got more than 2. Actually, I got 4, right? So I could have done that, right? And that's 85. So if I go back to the daily time frame, that means that another roll was possible, which was to move the 86, 87. So this could have been moved to 86, 85. Okay, and by doing that, you would have brought in a little bit of extra premium, having 85 a little bit closer to price, giving you a little bit more protection in case in the end we're going to be slapped on the face. Okay, so now if I did that, how much would that pay me? Is that something worth to do? So I did a simulation last week. So to save a little bit of time, I won't do it today. I'm just going to try to do the roll and see what happens. If I get filled this time or not. Last week I didn't. So we are looking at Lennar Corporation. We are looking at the call side. I want to close this. Okay, so why is... Yeah. I'm not sure why it didn't take the rolling order. Okay, now I guess I clicked somewhere in the wrong place, I guess. So we are looking at the expiration date is September 16, which is next week. So we are looking at September 16 closing the 94 and the 93, and we are looking at still September 16, but now we want to sell 85 and buy 86 above. That's what we're doing. Okay, so 85, 86, sell 85 by 86, September 16, and then close the 93, 94. So doing that would be done, notice, for an extremely limited amount of premium, which is not going to be worth it, so I'm just going to pass. What's my issue? My issue here is very simple. If instead of 93, 94 combined with 86, 85, okay, so if instead of that, I was combining 86, 87 with 86, 85, so these options are close to price, these options are close to price, I'm going to have liquidity in both, and I'm going to be able to do a roll, which is probably beneficial. The problem is that I'm trying to do the 93, 94, which I have up here in my writings, and they are so far out of the money that there is no liquidity. So if you look at the option chain, probably the spread is huge, humongous. Okay, on the September 16 Lennar, if you look at the 93, 94. So look at the problem we have. So you got ask of 75 cents and there is no bid. So because the spread is so humongous, when you try to close them and then you want to do the 85, 86, which are going to have more liquidity and more premium, well, you're being killed on slippage by closing the 93, 94 too late. So if I had done this, in a one day at a time, like we discussed last week, so I would be in a very good position. But at this stage, it doesn't make sense for me to do anything at all, because I'm gonna have to pay 3 cents to do the roll instead of being paid a decent amount of premium, which is obviously not something I want to do. Okay, so is this understood? Because obviously it's an ugly situation, but these things could happen, and that's exactly what's happening at the moment. Okay. And the next trade to examine, and please give me that answer on the chat box when you have a moment. I'm going to start looking at IBM. And that one is going to be a very easy one to discuss because there is nothing to be done with IBM. IBM is currently up by $7. Okay, this is a trade with expiration set to be September 13. Okay, so we still have time to expiration. Statistics suggest that we're going to stay inside the range. So the probability cone is being plotted inside the purple area, which is fantastic. We are not even crossing the purple areas, which is when rolling is needed. On top of that, we are actually crossing we're actually within the purple zone. So this trade is looking very good so far. Now, of course, we still have a few weeks to go. Like, for many things could happen, like earlier today, for example, the ECB in Europe reported a new interest rate for the euro. So, of course, all of those things generate potential impacts in the market, which are significant. And, of course, with 2-3 weeks to go, things may happen either in the world or the Fed in the US, or who knows. So, again, we need to keep assessing that. We cannot fall into overconfidence. But let's face it, statistically speaking, everything is looking very good at this moment in time. So we are good to go with IBM. Nothing extra to comment. So done with the review and ready to start looking for new market opportunities. My friends, please give me a quick okay on the chat box if everything has been clear so far and you're ready to begin with identifying trading opportunities, or let me know if you need any additional support or reconfirmation or re-explanation of anything discussed so far, or maybe you have other questions that you would like to address. While I'm waiting for your answers, I'm going to start loading the matrix. Okay, what I'm going to do today, given the fact that my portfolio, even though from a Greek point of view, my portfolio is loaded on Vega, right? So I got 24 Vega. I got a bit less than before because of the roll I did with Nucor, so that helped a little bit, but still, my portfolio is 22 instead of 29, so it's a bit better, but it's still positive. So, I would prefer to go the route of iron condors and things like that. But since we got two iron condors, IBM and Lennar Corporation, out of being more in the coaching / educational side, I would like to build another double calendar today, so we can have a bit more diversity in the account and more possibilities. Also, double calendars are often a bit more complex to manage if something happens, so that gives us more opportunity to discuss programmatic scenarios. If we are lucky and we get some problem arise, we'll turn it into a great learning experience. Obviously, is preferred when the trades are profitable, isn't it? But I'm also happy to get some challenges out there as I think of you. Mark, I tried to roll only 86.87 to 85.86 and TOS would not let me. Can't have two of the same strikes in a vertical roll. Yes, you are correct. You are correct. In your case, you will not be able to do that. So you would need to close the 86.87 manually. And once that one is closed, then you would enter a spread with the 85.86. So it would be a two-step action instead of a one-step action. Okay? It's a bit silly, but it's true. Certain trading platforms will end up giving you that type of error message, which have to do with their executions, I'd say, processes, which is something internal. Some brokers would allow you, but yeah, with TOS, I get it. Okay, so looking for opportunities, okay, with low volatility conditions, okay, for those double calendars. So we're going to look at CIV mean less than 20. Then we're going to be looking at loading the scan list with my penny increment options. We're going to be looking at neutrality, which I have daily, neutral, weekly, neutral. And then we're going to be looking at earnings, exclude 15 days. Well, you know what? We're going to exclude 30 days. Okay, we want time, so we have multiple weeks to do massages, right? Like what we have done with Lennar Corporation. We want to have multiple opportunities to do that. And then stock price range and auto climate. I believe there's nothing there. Perfect. That's it. So scan, let's see what happens. 1, 2, 3. Here we go. We got plenty of opportunities that meet those rules. It's good to see. So let's begin with the trades. Okay, so what do we have? Good. October 22nd for Amazon. You know what? Let's take a look at Amazon and see what Amazon has to offer. Amazon used to be a stock that was extremely high price. It's a fantastic stock to trade. It's a fantastic company, but it was very high price, which had me use it few times only for education purposes, because I understand that when we run the sessions, while some of you have traded for a while, I also understand that some of you may be newer to the markets. And if I give you a trade with stocks where the underlying is like $2,000 per share, things like that, so it makes the trades to be very high risk. And then for practice purposes, it's not convenient. So now Amazon, now after the split, is trading at $100+ per share. That makes it quite convenient. And we're going to explore this opportunity. Okay, so what do we have with Amazon? We have that, and perfect setup, because earnings are supposed to be reported on October 22nd, where we have an expiration date there right after, set to be on October 28. Okay, so we are right there where we need to be. So this is good. Okay, this is good. And therefore, Amazon is a valid candidate for us to plan on this trade. So what is the expected range if we get to that expiration date? Well, by looking at the extreme values, this will be the upper part of the range. And this would be the bottom part of the range. Okay, this would be the statistical range that we are dealing with from now until that expiration date on October 28th. So what do we do now? Well, we get the calculator, and we're going to divide that in 3 pieces. So the top part is 157.46. The bottom part is 102.92. So we take, actually I should have, silly me, 157.46 is minus, not plus, and 103.06. 103.06. This is the size of the range, so divided by 3, this is like $18, a little more than $18. So if I take 103.06 and I add $18, so we are talking about 121. Okay, so 121 more or less. Okay, so let's take a look at the option chain, and let's look at Amazon October 28, and let's look at the strikes available. So we are looking at 121 something, and we have 121. Okay, so 121 would be the strike for us to use. Okay, so this is good. So we're going to look at 121. Somewhere here. This is where we're going to have one. And then the other strike, we'll start from the bottom, from the top, 157.47 minus those $18. So that is 139 something. So again, when looking at the option chain, I believe we do have the 139 right here. Okay. And therefore, we're going to set that 149 on the screen. $149, a bit more. Here we go. So I must have made a mistake. 139, sorry. I'm like, that's not thirds. That's why I like to do it visual, because if I make a mistake, I can catch myself. Okay, 139. Here we go. Now we got 1/3, 2/3, 3/3. Okay. So how do we approach the trade? Well, again, utilizing the 139. We have time. Okay, so let me write it down for you guys. So we're gonna buy the 139 call using October 28 expiration, and we're gonna sell the 139 call using September 16 expiration, which is next week. Okay, this is gonna be the approach for the trade. Copy. Place it here, and then on the put side, we're gonna do the same with the 121. So it's going to be 121 put, 121 put. Here we go, right here. Okay, so this is the plan. Okay, this is the plan, and let's go ahead and implement this particular trade, and let's see what happens when we simulate it. Okay, so I'm bringing the option chain in. We are caring about September 16 and October 28. Everything else is not important. We are going to be looking at the 121 strike and the 139 strike. And with that, we're going to start with the call side. So we're going to buy the 139. Okay, so we buy the 139. And we sell the 139, and we buy the 121, and we sell the 121. That's the trade. Okay, so I'm gonna risk graph it. And here's a trade. Okay, so here's a trade. This is a trade where our starting point is $800 of risk. But again, just like the prior trade with Nucor, we started, I believe it was with $1,000 of risk or something like that. So every week we keep lowering down this value by implementing the actions that we implement. And if volatility rises, so this trade is gonna provide a much greater level of profitability, okay? So this trade is indeed valid, and I'm just gonna go ahead and execute this trade using TOS. So Amazon, we are looking at October 28 and September 16. And let me delete this. And we're gonna start with the 139. So 139, we're gonna buy the call, and then 139, we're gonna sell the call using September 16, and then we're gonna sell the put using September 16, and then we're gonna buy the put using October 28. So all of this together implies, wait a moment. Yes, I did it right, correct. For a moment, I thought I made a mistake. So October 28, buy the 139 calls, buy the 121 put. September 16, -1, sell the 139, sell the 121, and that is $800, $813. This is the midpoint. So I'm just gonna execute this trade and see what we get when we get filled. Hopefully I can get the midpoint. Again, in the sessions, it's important. I know I repeat it all the time. You're probably tired to listen to the same guys, but I am aware that many attendees are watching the sessions recorded and may be new to options trading. They may only listen to the end. Next thing you know, they get in trouble with the execution. We do not force trades. We do not push values. We gotta be very careful here. While I often do this, right-click, cancel and replace, and use a worst price to challenge the trade and see if I get filled faster, I do it only for the purpose of documenting the trade for the sessions. When you are doing these trades at home, you should be patient, wait to get filled, and if you're gonna move the price, which obviously sometimes we do, you just do it after a while. You don't do it immediately like I'm doing, or using a market order, which I've done many times, which is completely crazy when you do a spread of this sort, okay? So please do not do that, and make sure you are fine with your executions. So I'm gonna try a 20. See if I get a 20. Okay, we'll see. I don't see any more questions there on the chat box. This, my friends, will be the trade of the day. So after this trade, we are basically done. So if you have any comments or questions or anything, I'd love to hear from you guys. This is the great time for you to phrase those questions. I'll try 825. Come on, give it to us. You know what? By the way, it happened to me before because we're using you can see on the upper left, it's a simulated account with TOS. It happened to me in the past that when simulating trades in stocks that went through a stock split, the simulator was not working well. So I'm not sure if this is the case. I saw pretty decent liquidity in the option chain. We should be being filled at this moment in time. Current price is 806. So I'm not sure why I'm not being filled at 825. So maybe that's the reason. Okay, I would think in a real account, you may get it. I'll try 830 and see what happens. Come on. Okay. Okay, let me go to 850. See what happens. Yeah, that may be the issue, because, yeah. So if I go back to top, 819 is the ask price. So if I do a market order, I should get this. So how come I'm not getting 815, right? So this probably has to do, Well, again, it's not ideal this is happening, but if you guys are doing some back testing or some forward testing of your strategies and you run into this, at least you see me run into this too, and now you know why. Okay, so it happened to me in the past, and it has to do with what I said. So I have this red color here. I don't know what that means, to be honest. Let's try a market order. And I'm not being filled, so there is certainly an issue there. It's probably related to that. Okay, so I guess that I may have to go the route of documenting the prices manually with Amazon. That's sad. I was excited that we are taking a trade on Amazon that we haven't done in the past because of the high price of the underlying. Now that we had a stock split, it was nice to see. But anyway, so we'll do the needed 425, 034, 478, 069. Okay, those are the mid prices from here, and that's gonna make the net cost of the trades $8. Okay, so this is what we got, and this is what we have. So I'm just gonna copy this to our positions panel, and this will basically get us to the end of the session today. Okay, I'm gonna close this. Yeah, it's a bit unfortunate that I did not get filled. The mark is happening. Create a duplicate order, and it still shows that red color link. So yeah, that must have to do with the fact that the stock has been split. It's been a while, really. They should have corrected that. I'm just gonna add those vertical and horizontal lines so we know the day and the time when we enter the trade. And I'm gonna save my page as options with options. Here we go. That's it. My friends, we are done. I don't see any additional question from you guys, so I believe that all is good, unless you are busy putting the trade in place, and that's why you are not typing on the chat box, but which I would like that very much. So I will see you in the next one. The next one will be for me, I believe, next Thursday, so see you then. Actually, I think I will see you on Monday. I believe I'm scheduled to do a market commentary on the Monday, so I will see you then. And I just wanted to share as well a little bit of a good news that you will see announced very soon with emails and everything else. We have our NinjaTrader technology completed, and we will have NinjaTrader on our website available for everybody like really, really soon, because it's all completed, all the tests, everything else. So I'm very excited about the launch of a new platform, especially very useful for futures traders. It's gonna be great. You'll see a few new things, such as being able to see the UFOs in a table format and things of that sort, which for intraday traders is gonna be quite convenient. But anyway, we'll talk about this in future sessions. We'll run a special webinar for that purpose as well, and you will receive email notifications so you are well informed. Just happy to share the good news as always, and wishing you a good trading day, and you guys take care, and I will see you next week. Bye-bye, everybody. Take care.